and welcome. You're watching Closing Trades here on ET Now. I'm Harsh Saita and we're coming to you live from the Suzlon studio. Let me quickly take you through how the market texture is shaping up. 0.25% lower on the Nifty 50 index. In terms of the breadth itself, it's largely 1:1, 28 advances to 22 declines. But the declines are in the heavyweights. HDFC Bank, Infosys, Reliance, Bajaj Auto, ITC, TCS. That's the top 6 or 7 names. And what you will gather is that some of these are heavyweights in themselves, even within, even on the index itself. And therefore, you're seeing that pressure. In fact, HDFC Bank, second straight day of losses, and another 50 points shaved off the Nifty as a result of that. Reliance shaving off 25. Infi, SBI, ITC combined are shaving off another 25. So what we're seeing is a 100-point gash on the back of these 4 to 5 counters alone. Excuse me. Now, when you're looking at the broader markets as well, you're seeing a totally different picture, frankly. The small cap index is up 0.5%. The midcap index is up 0.33%. So there is a divergence there. Realty is the pack which is doing well, 0.2% higher on the Nifty Realty index. We're seeing some decent moves coming even within the breadth on the Nifty 500. 280 advances to 222 declines. Transformers and rectifiers, Aegis Logistics, ABSL, AMC, Gallant Ispat and Paytm are just some of the casualties, all down 3% plus in trade today. Karur Vysya though, stock is up 13%. Again, there was an earnings call last evening, and as a result of that, you're seeing the reaction. Action Construction is the other one. Gujarat Fluoro is the other one. Some real strong gainers within the Nifty 500 basket. If we can pull some of those up, it'll give us a good perspective as to how the move has been intraday. But broadly, Karur Vysya is the one in focus with that 13% move. That's how it's playing out, at least on the index. I'll just quickly name the others as well. Karur Vysya, Action Construction, again on the back of numbers. Gujarat Fluoro, Balrampur Chini, some of the sugar stocks. Canara HSBC is up 5% as well. Manappuram is up 5% as well. So you're seeing some very decent moves within the Nifty 500 basket. Let me quickly go across, though, in terms of sectors, before I go to Avi, who's standing by. In terms of sectors, you're seeing some decent moves sectorally as well. Of course, some of the frontline sectors seem to be under a bit of pressure. But outside of that, you're seeing some good moves. So FMCG, IT, banks as well, to some extent, led by HDFC. There is some bit of pressure coming in. But outside of that, you're doing fairly okay. Let me go across to Avi. Some movers in trade this afternoon. Avi, what's on your list?
Let's discuss some of the stocks that are buzzing in trade, starting off from Action Construction Equipment, whose stock has come out with its Q1 FY27 results, and the bottom line and top line both have done very well. The margins have also expanded on a sequential basis because of prudent cost management and the calibrated price actions that the company has taken. It is the best ever Q1 top line and bottom line for the company. Up next is Interglobe Aviation, which is up by 1.5% on back of signing an MOU with CFM for 1,000 LEAP 1A engines. This will help strengthen its fleet size and is a very big order for CFM as well. Up next is Granules India, which is up by around 2% on back of its Q1 FY27 results. The net profit is up by around 60% and the revenue is up by around 22%. The EBITDA margins have also expanded on a year-on-year basis. Up next is Arvind Fashions, which is showing a reverse trend as to the numbers are very good, and yet the stock is down by around 1.5%. The profit has increased by 23.8% and the revenue is up by around 15.5%, and the EBITDA margins have also expanded by around 0.5%. Up next is Bajaj Auto, a Nifty 50 company who has come out with its Q1 FY27 results, and it is a very strong beat on what the street was estimating. The street was estimating an EBITDA margin of 20.1%, but the company has delivered a 20.9% EBITDA margin, even though of the commodity cost pressure that the company is facing. So a very strong number from Bajaj Auto, and the export markets along with the EV segment is doing very well for the company.
Okay, thank you so much for that, Avi. Kunal Bothra joining us as he always does in studio. Kunal, contextualize the move today.
Yeah, it's a good move for the markets, frankly, because given the kind of expectations we had, that the markets would probably be a little bit more on the softer side. We may probably try and nudge around the 24,000 mark. It's a good day for the indices because we are trying to digest what had happened on Friday. That 250-point move on the Nifty, where we moved closer to the 24,300 mark. Post that, you're seeing the subsequent 2 days, the markets just about taking a bit of a backset as such. I would actually believe that this could be a positive sign overall. The put call ratio, which was almost at 1.6 when we ended the last week, has now come back towards 1.3, 1.4. So we have now neutralized on the put call ratio also going into the weekly expiry today. So I think on the back of this, my expectation is that the markets have done reasonably well this week, and they would continue to be a little bit more attractive now that the post today, the monthly series expiry starts off. So the markets would be a little bit more busy with terms of rollovers. But I would sense that given the mood of the market in the entire month of July so far, I would sense that there should be more positive rollovers for the stock-specific front. So net-net, the view remains on the bullish side for the indices.
Okay, bullish for indices. But what we'll do is slip into a very short break, come back with more. We want to take Kunal's picks this afternoon, get a sense of what do you trade in a market like this. Stay with us. Welcome back, and we've got the numbers of TVS Motors flashing on your screen. 13,896 crore is where the top line has come in at. 1,780 crore on EBITDA. That's a 10% beat on the EBITDA count alone. Margins at 12.8% versus 11.9% expected. And the 13,896 crore top line is also a strong beat versus what was expected at 13,488 crore. So that's nearly a 400 to 500 crore beat, which is a 3 to 4% beat per se on the revenue expectations. When you're looking at the EBITDA number, 1,613 crore versus the 1,780 crore that's come in, and profit after tax was expected at 990 crore. It's come in at 1,174 crore. So you're seeing a very sharp uptick on the stock, 4.25% in terms of the uptick, and it's a good move coming in for TVS Motors as a result. The 12.8% margin really stands out for me because TVS is known to do a 10 to 11% kind of margin number. This 12% is a standout number from a margin perspective, or 13%, nearly 12.8 odd percent. So you've seen a very sharp move on the stock price as well as on the margin count. In fact, they've done that for a couple of quarters over the last year, but 12.8 is certainly something which looks strong from a margin perspective. This uptick in stock price, Kunal, quickly on TVS Motors, should it be bought? Should we wait?
Yeah, it should be bought into, but I'll just wait for maybe a confirmation of a break back again about 3780 mark, which is the intraday high for TVS Motors, because I think once that level gets taken out, then it's a series of a major resistance being broken for the stock for the last 2.5 odd months. It also completes potentially an inverted head and shoulder pattern, which is also considered to be very positive for the stock price. So looks positive. Traders, who are looking out for confirmation, can wait about 3780 as a closing based breakout level for TVS Motors.
Okay. Understood. And what about some of the other automakers, Kunal? How should one look at the auto pack as a whole? Because you also had Bajaj Auto's numbers. How are you looking at it on charts?
So I think except for today's reaction, Bajaj Auto over the last 2-3 weeks has been quite positive. The stock had recovered from 9,600 levels to almost 10,500, 600, which it tested yesterday. So a decent, 9-10% recovery for Bajaj Auto in that sense. Hero MotoCorp is also seems to be forming a good base around the 4,500 to 5,000 kind of a range for Hero MotoCorp. That's also something which looks attractive. Eicher Motors, of course, from the two-wheeler pack has been one of the strongest one over the last 2.5 odd years and continues to be a stock which is showing signs of strength. So the overall sector is, I'll say, in a very decent footing compared to what they were maybe 3 months, 6 months back when crude oil prices were hovering about $100+ per barrel mark. So I think in that sense, we are at a point where the auto stocks have at least stopped falling and many of them have started to show signs of good recovery.
Okay, all right. So that's with regard to auto. Let me go across to Meryl. She's here with some of the stocks that are buzzing in trade.
Right, so these are some stocks which have been seeing some action in today's trade. Starting with United Breweries, this is on the back of its FY26 annual report, where the management has highlighted that they have initiated pricing interventions, operating cost optimization, and also productivity initiatives. On top of that, they've also guided that the company remains well sustained, well positioned for future growth, and this future growth will be backed by the company's manufacturing network, strong brand portfolio, and strategic investments. Also buzzing in today's trade is SML Isuzu. The company has reported an 18% rise in FY26 revenues and a 31% jump in profit after tax. They're looking ahead. The management has also outlined an ambitious plan to build a 12,500 crore business by the year FY31, and they're also aiming to be the top 3 players in the intermediate light commercial vehicle segment. Also buzzing is iFinance. In its annual report, the company has guided for a 25 to 30% AUM growth in the year FY27, and they've also aiming to expand this AUM to up to 24,000 crores over the next 5 years. Currently, the AUM stands at around 7,044 crores. On top of this, they're also expecting operating leverage to lift ROA to a 4 to 6% throughout the cycle, while credit costs are seen stabilized at 3.5 to 4%. In some negative news, we've got Patel Engineering. The company has informed exchanges that of a gas leak at one of its projects. This is the Samardang Tunnel project in North Sikkim, where around 25 project personnel are trapped, with certain casualties also announced. And another stock in focus is Great Eastern Shipping. The company has completed the delivery of its 2009-built LR2 product tank jug location to the specified buyer, and the vessel had already been contracted for sale during the second quarter, so a timely update on that front as well. And yes, these are some stocks that we've seen buzzing in trade today.
Thank you so much for that, Meryl. Kunal, the tilt of the trade, if you can give us a sense, IT banks not doing well today either.
Yeah, I think today is a soft day for those banking names for IT, but I would not read too much into it because the near-term trend for these stocks are on the positive side. Banks, of course, we all know the reasons why the sector is correcting, and especially with those larger cap names, which over the last two days or so have gone through a result-based price action. So we let those stocks do their own part in terms of going through a correction and then consolidating maybe over the next 3, 4, 5 days or the next 1 to 2 weeks, and then try and look at or establish strong support territories for many of these private sector banking names. So I think in that sense, there are other sectors which are trying to offset. Defense is looking quite attractive. Auto stocks we're discussing, I think that's the sector which has started to perk up quite well. The NBFC pocket, the financial services name, have been doing really well. Smaller sectors like sugar, etc., they've been starting to look attractive. So I think the markets are concentrating on other sectors till the time the bank Nifty and the private sector banking names take a bit of a mean reversion as such.
How long do you expect this reversion to last, Kunal? Because it's going to be a painful one if it were to last long.
No, so it's difficult to try and call in the bottom in terms of a consolidation. But, I would sense that this could be a good opportunity for investors who are looking to buy, good price, good news. We all know never comes together. And, when you see quarterly reactions into stock prices and when they fall by 5-10% for these formidable names, I would actually believe that a 10% drop from the previous, say, a Friday high, closing high for these stocks actually becomes a very good territory where traders could look at a buy. So maybe another 2%, 3% pain, which could be there. But then I would believe closer to that 10% drop from the previous highs, I would sense that there could be a very good medium-term kind of an opportunity which could build up into these names.
So you go out and buy some of these names from a medium-term perspective, not from a short-term perspective. The rotation trade will therefore mean that you go more bottom-up and more stock-specific, I believe, Kunal. What should you go out and buy?
Yeah, so two buy calls which I would suggest. Hindustan Aeronautics apparently is one of the few defense names which is actually showing signs of a potential breakout above 4,500 mark. Looks attractive at the current junctures. Would eye for at least another 200 points on the upside as a target. So buy with a target of 47.50. Stop loss to be kept at 44.50 mark. The second would be a buy on AB Capital. Now this is a very interesting chart. We've been bullish on AB Capital since the last few years. it continues to surprise on the positive side. The stock has crossed about levels of 400, looking quite strong, breaking out of a minor flag pattern formation on the daily charts, more clearly visible rather on the hourly charts. But then on the daily time frame, the stock has confirmed a breakout. So we'd look at 424 as the next target for the stock. Stop loss to be kept at 399.
Okay, so that's the tilt of the trade. Let me go across. We're joined by Rakesh Vyas of Quest Investment Managers this afternoon to give us their view on the market. Rakesh, great having you. Let me start off by what you're doing in a market like this, Rakesh. There's so much sector churn. One day you've got IT buzzing, the next day you've got banks and IT is in the red, and then third day you've got both of them in the red and a completely new sector emerging. How should one look at the tilt?
Yeah, hi, good afternoon, and thanks for having me on the show.
Good afternoon.
So you're right. I mean, sectorally, we are seeing quite a lot of churn, but I think fundamentally where we are putting our money across is where we believe that over next 3 to 6 months and maybe even longer, from 1 to 2 year perspective, we continue to see very strong earning trajectory, and therefore some of the financial services plays which are more into NBFCs and small banks, consumer discretionary as a space, auto ancillary as a segment. So these are the names where we have been far more positive on, and we continue to remain reasonably more positively biased towards those.
Financials, I believe Rakesh is a consensus trade, so I'll touch upon that later. Let's talk about auto Ank. We've seen a decent run up, especially post the GST rationalization. In what segment now would you start to place bets at this juncture from a risk reward standpoint?
So I think across various direct OEMs, if you think of it, there are opportunities in the four-wheel space, also in the farm equipment plays largely, where we believe that the concerns related to deficient monsoon and early low seems to have been far more priced into the stock price already. But what we are also seeing is very strong traction on the four-wheel passenger vehicle segment. And also, when you look at the numbers and when we have spoken to companies, it comes out very clearly that companies have been able to mitigate a lot of this raw material price inflation through price adjustment in last 3 month odd period. And now that we have seen RM prices stabilizing and moderating from here on, the margin profile for these companies can actually see reasonable uptick compared to what we have seen in recent past. And therefore, this gives them a very large operating leverage play also, with stronger volume growth and better margins coming through, gives you a much higher traction on earnings. Also on the auto ancillary space, if you see a lot of companies which started as pure play auto segment plays have now diversified into various other segments. We have a company in our portfolio called Sensex Engineering. It's not a recommendation, but I'm just highlighting as to where we are actually thinking of these plays largely coming into diversifying beyond auto ancillaries into aerospace defense segment, where the opportunity for global supply chain remains very, very high for quality Indian manufacturer. And that's a theme that we still continue to like.
I want to question you a little bit more on that. This aerospace theme, the multiples being given to some of these companies are obviously extremely elevated. How should one look at scale in this business? Because it's a slightly more gradual business, but it's a more consistent business, if I can call it that. And give us a sense, therefore, how to look at it structurally as a story, because how much of the future earnings are actually borrowed in today's valuations is what I'm trying to assess and judge. And how do you pick, therefore, the right value at the right kind of time and price?
Sure, no, very fair question, Harsh, and I think you have asked a question that we continue to deliberate on every day, to be honest. But as you also rightly indicated, I think the entry barriers to this particular business is very high. And when you look at the overall opportunity, and I'm just talking of the commercial aerospace segment today, where the two large players have very large order book already in play, right? But they are struggling for adequate supply chain backward integration and things like that, and therefore the supplies are constrained. They are in dire need to look at quality suppliers, and which is where I think some of these Indian companies are actually very well placed. And when you look at these companies, I mean, for example, some of the companies that I just talked about, right? They are growing maybe 50 to 100% on revenue growth trajectory. And this business, especially in aerospace defense, has far higher margin profile than what you would probably have in the pure auto ancillary space, right? So you have a meaningfully higher growth with much better margin profile coming in, is the play that we will probably look at. And I think once you enter the space with the set of OEMs and the ecosystem, the opportunity to then increase your wallet share is much higher, and therefore this opportunity for Indian manufacturing, especially in this segment, can be a very long-term story. Of course, the valuations one need to be reasonably careful of. You need not pay very high multiples. So if you are looking at, maybe companies growing at 25-30%, a PEG of maybe between 1.2 to 1.4 times still looks reasonable to.
Rakesh, very quickly trying to understand what's changed in the environment, because we're seeing more of these stories come to the fore. Is it just that these stories were largely not spoken about, and now suddenly there's conversation, or has something changed on ground structurally from a business standpoint that we're getting more recognition and more orders from this segment?
No, I think a large part of it is actually more environment driven, and what we have seen in last few years, where Indian companies have entered the ecosystem of the supply chain, right? And therefore, some of them were initially very small players, and they've been able to prove their capability and quality, and therefore the incremental market share or wallet share gains are meaningfully higher. And based on the confidence that some of these OEMs now have on Indian suppliers, they are actually scouting for quality plays across the board. And that's why I said, some of the plays that we are talking of actually started their business as auto ancillary plays and are now migrating or diversifying into aerospace defense. And I think this opportunity is largely also backed by, as I indicated, very large order books that companies already have. And they are still struggling to find reliable supplies at reasonable price points. And this is where Indian precision engineering companies can actually play a pivotal role going forward as well.
Interesting. From the financials, Rakesh, how would you play it? Because there are just so many ways to address that. Where is it that risk reward is the most favorable at this juncture?
So I think two segments where we are more positive on, especially on the lending side, is actually the small size banks, which are probably talked about as more regional banks, are now diversifying from those specific regions to other regions as well, which is driving a reasonable amount of growth trajectory from there. So if you look at the credit growth numbers, right, we are touching 17-18% as a system-wide level. So there are opportunities in some of these smaller size banks where the growth could be at least 4, 5, 6% higher than this. And that is what is going to drive the NII growth and earning trajectory as well. Also, NBFCs as a play, I think, given that there is so much of credit growth, and these companies will also benefit from the large FCNRB deposit that are coming into the larger banking ecosystem, which will then get passed on to the smaller banks and NBFCs also, are the place where we think that if companies are able to deliver upwards of 20% credit growth, there seems to be a reasonable opportunity for earnings also to compound at least with that number or even higher, because we believe that NIMs probably have now bottomed out, and NIM obviously have a scope to expand further from here, which will drive incremental earning growth as well. So these are the places where we are actually betting our stocks on. So a few names that we have already in the portfolio, which is a public disclosure, is City Union Bank, Tata Capital, and things like that.
Okay, so some of the smaller names. And how do you look at the AMC pack very quickly before I dive into that break?
Yeah, no, I think AMC is a structural story, and therefore, some of the large AMCs will probably continue to gain from the large SIP flows that market is continuing to see, and companies which have had very strong performance track record over a period of time, have a very strong distribution mode, will probably see them continuing to have meaningfully higher market share, at least able to retain or maybe improve from there off. But the challenge in AMC also, as you know, Harsh, is that incrementally with larger AUM, the TR actually comes down, and therefore the translation of AUM into revenue growth could have some moderation. But it is also a very large operating leverage play, right? So with similar kind of operating structure, you manage a 1 lakh crore AUM and you can as well manage a 10 lakh crore AUM, and therefore the operating leverage is something that will drive the earning over and above the risk that I highlighted. A reasonable multiple around AMCs is what we have been focusing on. We already have ICICI Pru AMCs in our portfolio. Stock has been doing well. It's also a play where there is reasonably large alternate business where at least the risk that I talked about around TR is not so prominent. And this is where their ability to mitigate that challenge on reducing TR will get addressed.
Okay. I'm going to dive into a very short break. It's a mandatory commercial. So I'll pause this conversation for just a few minutes, take that break, come back, continue to talk stocks. What is Rakesh going to be cautious on? We'll talk about that on the other side. Stay with us. One was financials. We spoke a little bit about that, but more importantly was the auto theme and stocks going into the aerospace segment. We spoke fairly well on that. That was an interesting part of the conversation. But Rakesh, let me extend this. Try and get a sense as to what you're completely avoiding at this point of time. What likely is a consensus play which the street seems to be getting wrong in your opinion?
No, I think if you look at the overall holdings of larger players, they have reasonable overweight on the large private banks, which is where I think we have a anti-consensus view. I think some of these banks are actually still struggling for either growth or margins. And with the size that they are now at, it becomes very difficult for them to continue to outpace the overall system credit growth. And therefore, that is a segment where we have consistently moved away from in last almost 1.5 year. And as I indicated to you, we have moved towards some of the smaller banks and NBFCs as a play. Also, I think we have been reasonably positive on the power T&D play, very different from, let's say, the renewable equipment manufacturers or the power generation plays in general, where Street has been far more positive on earlier. But I think power T&D also has become a reasonable consensus, play largely now. But I still think that there is a medium-term opportunity, not just in India, but globally for these equipment suppliers, given the kind of demand that we see on grid strengthening and data centers, etc. So this is another place where we've been positive on. And I think incrementally also Street is now tilting more towards consumer staple part of the business, where I think some opportunity to take price hike, given the raw material inflation, is what is exciting everyone. But therein, we still struggle to see these companies doing meaningfully higher volume growth, and therefore, what we talked about as operating leverage is something that we don't see coming in a material way beyond this recent price hikes that we have seen recently. And therefore, I think these are the names where we have been far more cautious on and underweight on. Also, I think it's not a consensus play right now, but large IT companies have been underweight position for us for a pretty long period of time, which is where we think that growth is still very, very meager or moderate. And therefore, despite the correction that we have seen already in the multiples, we still continue to remain far more negatively biased towards those.
Interesting. Last piece, Rakesh, is to try and get a sense from you. Therefore, if large cap IT is something you seem to be underweight on, would you go a little bit lower on the curve where the growth is a little bit better, but of course at slightly more premium valuations?
No, of course, and that is what we have done, Harsh, also.
Okay.
I think post the market fall that we have seen, we have, added Coforge. Also, we have earlier been positive on Oracle Financial Services. That's been part of our portfolio for some period of time already and persistent as well. But I think given the multiple correction that we have seen in Coforge, which used to earlier maybe trade at between 1.8 to 2 time PEG, came down meaningfully. We saw an opportunity where growth profile for this business remains very, very strong. And the multiple that we are now paying for are far more reasonable, and therefore we have added that name. So yes, of course, I mean the thing that you talked about moving out from large cap to some of the mid-sized companies where growth profiles remain strong at are available at reasonable multiple is something that we have done.
Rakesh, thank you so much for this conversation. Plenty to take away.
Thank you so much for having me. Thanks.
Okay, no, thank you. Totally our pleasure. What we'll do is we'll go across. We're joined by Avi at this point. Bajaj Auto's Q1 numbers. Avi here to tell us more. Margin beat, Avi.
So Bajaj Auto has come out with a very strong set of numbers as the revenue is in line, but there is a big beat on the EBITDA margins, which is at around 20.9% as to what the street was estimating at 20.1%, and it is a 10 bips increase on a quarterly basis despite the commodity cost pressure that the company is facing. This can be attributed to the forex gains that the company has since it has forex exposure in the export markets. Their EBITDA came in at 3595 crores and adjusted PAT at 2983 crores, which is up by 10% on a sequential basis. So a very strong set of numbers from Bajaj Auto despite the commodity headwind, and this can be seen as a very big positive for the stock. EVs now make 30% of the domestic business, and the revenue is already double on a yearly basis for the EV segment. It is important to note that the Chetak demand, which is the Chetak EV demand, is now outpacing the supply that the company has, and the company is already undertaking capacity expansion to scale this up and for exports as well of Chetak EV. The E3-wheeler business is now two-thirds the size of the ICE three-wheeler business, and the KTM and Triumph domestic revenue is up by around 60%. In the range of 125cc to 160cc, the company is now ramping up models to reinforce their leadership in the sports segment. Exports have also surprised the street, and it has crossed 700k units for the first time in the quarter gone by, with standout performances in markets of Latin America, Nigeria, which is up by around almost 3 times. Also important to note that the company is sitting on a cash balance of 21,000 crore rupees, which enables the company to take decent capacity expansion and to meet this rising demand in the e-wheeler segment, EV segment. So a very strong set of numbers from Bajaj Auto.
Strong set of numbers from Bajaj Auto. TVS Motors is the one on fire, up almost 6% as we speak right now, as is the case with select gold financiers. Manappuram Muthoot once again back into the fore, and both of them holding out very well. IndusInd Bank, of course, has been the big mover from the word go today, and even right now it's standing on to a gain of about almost 3%. Dixon, Premier Energies and Paytm, given the bonus issue or news flow on the bonus issue, that stock is a little disappointed in trade, down about 3% as we speak right now. But the key culprits today is the trio of HDFC Bank, lower by 2% once again, Reliance down over 1%, and Infosys down nearly 1.5%. Let's take it across to Shivangi Sarda. Shivangi, hi, afternoon. Great to have you on the show. And Shivangi, let's discuss some of these key index stocks, HDFC Bank and Reliance, because they are the ones which are really weighing heavy on the index. When do you foresee them come back to the green?
Very good afternoon, Aisha. Thank you for having me. So we've seen that markets have been witnessing some bit of support-based buying, which is intact, but some global concerns as well as the heavyweights not holding up at the higher levels have kind of dampened the sentiment for a range-bound Q over here in the market. Overall, if you look at the heavyweights, they continue to put pressure, be it Reliance or the heavyweight in the banking counters. But the good part is that the mid-cap space is somewhere holding up, as well as the PSU banking space are contributing to the bank Nifty. So overall, market sentiment looks, kind of mixed right now, with the major heavy lifting done by the other stocks and the heavyweights in pressure. Looking at a HDFC Bank, we've seen that, of course, it was result sentiments that have not been taken, very well by the street. And we've seen that the stock is facing a backlash from the last 2 days. Now, there is a bit of support at 750 odd levels, but we'll want to wait and watch on this one. we could focus on the PSU counters, which are doing quite well. And, heavyweights could take a little bit of a back seat in the next 1 week till the July expiry.
Really seems to be the case. HDFC Bank, of course, weighing in quite heavy, as is the case with Reliance and Infosys. Even SBI today is not participating, 1% lower for SBI as we speak too. But the big mover this afternoon is TVS Motors after its numbers. Avi joins in with a detailed analysis on how TVS stacks up.
TVS Motors have come out with the Q1 FY27 numbers and they are very strong on all fronts. By what the street was estimating, it is a beat by 10% almost on all metrics. The net profit came in at 11,740 crore rupees, top line at 13,896 crore rupees, EBITDA at 1780 crore rupees, and the margins also expanded by 30 bips on a year-on-year basis. If I talk about the segment-wise increase in sales, so the motorcycle increased by 19% on a year-on-year basis, while the scooters increased by 36% and the three-wheeler segment increased by 48% on a yearly basis. Due to the global uncertainty, there was a commodity cost pressure which the company was facing, and to offset it partially, the company has taken calibrated price actions due to which they were able to protect their margins. They've also announced that they will be raising 1,000 crore rupees via NCDs. And the company has posted the highest ever quarterly sales in the quarter gone by and the highest ever revenue for the Q1 that has gone by. The two-wheeler electric sales have risen by 86% on a year-on-year basis, coming in at 1,29,000 units for Q1 FY27. The three-wheeler segment has also shown a very strong growth of around 48% on a yearly basis. So the numbers are very strong for TVS Motors, as the profits and top line both have beaten what the street was estimating, along with the fundraising that will further boost the capacity expansion for the company.
There's also an extra 100 crore. Thank you so much for that, Avi, by the way. There's also an extra 100 crore in other income, which is reflecting on the profitability. But even devoid of that, it's a strong profit beat coming in from TVS Motors. Shivangi, let me come to you with regard to TVS on charts. How is it looking?
So looking at TVS Motor on chart, we've seen that they've not been, of course, the price volume surge is quite well today. But overall, on a larger time frame, the stock has been resilient despite the kind of volatility in the entire space. So definitely, this one's a better stock out of the lot, and we've seen that it is holding beyond its resistance levels and comfortably trading near 3,800 levels. So once it holds above these zones, which would be important to watch out, 3,750. If it holds above 3,750, then we could see an up move towards around about 3,900 odd levels with a support base of 3,700.
The auto hanks actually have been performing very well. Look at a Sona BLW, for instance. It's been moving up very smartly. Motherson, of course, or Samvardhana Motherson is one stock that, Canal as well has been flagging off for quite some time. Bharat Forge, not quite a pure play auto ancillary anymore. It's more a conglomerate and has defense exposure as well. And that's why perhaps the market has been giving it that kind of premium. But nonetheless, most of these auto-anch names are holding out very, very smartly indeed. TVS Motors, of course, is the key winner today. That holding up very smartly after its numbers. We'll take a very quick break on that note. We'll continue analyzing markets on the other side. Down about 98 odd points for the Nifty futures. 24,150 is what we're still holding on to. Reliance, HDFC Bank, Infosys under pressure. But on the flip side, there's strength for an Interglobe, for a Bajaj Finance. Ultratech Cement has been a one-way move up since its numbers. Shriram Finance is looking very strong. Eicher Motors, Kotak Bank has definitely rebounded from yesterday's weakness. And M&M as well is holding out well. Today, of course, some earnings reactions like a TVS Motors. That stock has flared up about 6%. Manappuram Muthoot are moving up very, very smartly indeed. And some of the other gold ancillaries, if you can call them that, they're the ones also holding out well. In fact, Shivangi, come in on the charts of both Manappuram and Muthoot, and do you see a sustained up move now?
So Aisha, this space has definitely done pretty well, but there are selective pockets that are to be watched out if we are talking about gold-related stocks. Of course, Muthoot and Manappuram both have seen a very good negation of the last five trading sessions and a good amount of price and volume surge over and about 4% up move today. But my preferred pick on this entire space would be Titan, which has been resiliently stronger out of the lot and even on the monthly frame, we've seen a breakout with a continuation of the follow-up buying after the breakout and strong up moves containing above the exponential moving average on the daily basis as well. So Titan is definitely on my checklist, and we're looking at the next targets of around about 4850 immediately, and then 4900 for Titan with the support base at 4600 levels.
Okay, the other one which has come out with numbers is M&M Financial, and it looks like a very, very strong set at the outset. I'm just going to pull out the impairment number actually. Believe that there is a beat on that count. Well, it's at 570 crore versus 560 crore same time last quarter and 660 crore same time last year. So 100 crore added in terms of profitability right there. And when you're looking at the numbers, they're looking very, very sharp indeed. Last year, the PAT number was at 429 or 430 odd crore. This quarter, the PAT has come in at 899 crore, which is just shy of 900 crore. Even last quarter, that number was at 873 crore. So you can see the spike on the stock price. And very quickly, just taking you through the NII number as well, which is the net interest income. It's come in 20% higher on a YOY basis. It's come in at 2413 crore versus 2013 crore. Capital adequacy remains strong. No fundraise likely in the immediate term, at least basis the number that I'm seeing on my screen, which is at around 18.5%. Gross NPAs have inched upward, some part of it due to seasonality, as is always the case in Q1. But that's really how it's shaping up. Before I go to Vineet Bolinchkar, who's also joining us, let me take a chart check from Kunal. M&M Finance, Kunal?
Yeah, it's a very interesting chart because the stock had been relatively underperformer with respect to many of its other peers. We look at 2022-23, the stock was almost at 300, 320 mark. There was a phase in 2025 where the stock moved up towards 400, but then it fell back towards 300, 320 odd range. So it looks like that the stock is ending this period of 2-3 years of a consolidation, and now the risk what starts to look attractive on two fronts. One is because of this time-wise correction, and the second is you look at the entire sector. Most of the stocks are coming out of their consolidative phases and starting to show signs of a big breakout for themselves. So we are in an environment where the entire financial services basket looks very attractive. I think in that sense, M&M Finance could be a good bet from the current levels.
Okay, that's that on M&M Finance. In fact, we're going to take a very quick break on that note. When we come back, Vineet Bolinchkar as well is going to join in on the market discussion. Down about 98 odd points for the Nifty futures, 24,150 is what we're still holding on to. Reliance, HDFC Bank, Infosys under pressure. But on the flip side, there's strength for an Interglobe, for a Bajaj Finance. Ultratech Cement has been a one-way move up since its numbers. Shriram Finance is looking very strong. Eicher Motors, Kotak Bank has definitely rebounded from yesterday's weakness. And M&M as well is holding out well. Today, of course, some earnings reactions like a TVS Motors. That stock has flared up about 6%. Manappuram Muthoot are moving up very, very smartly indeed. And some of the other gold ancillaries, if you can call them that, they're the ones also holding out well. In fact, Shivangi, come in on the charts of both Manappuram and Muthoot, and do you see a sustained up move now?
So Aisha, this space has definitely done pretty well, but there are selective pockets that are to be watched out if we are talking about gold-related stocks. Of course, Muthoot and Manappuram both have seen a very good negation of the last five trading sessions and a good amount of price and volume surge over and about 4% up move today. But my preferred pick on this entire space would be Titan, which has been resiliently stronger out of the lot and Even on the monthly frame, we've seen a breakout with a continuation of the follow-up buying after the breakout and strong up moves containing above the exponential moving average on the daily basis as well. So Titan is definitely on my checklist, and we're looking at the next targets of around about 4850 immediately, and then 4900 for Titan with the support base at 4600 levels.
Okay, the other one which has come out with numbers is M&M Financial, and it looks like a very, very strong set at the outset. I'm just going to pull out the impairment number actually. Believe that there is a beat on that count. Well, it's at 570 crore versus 560 crore same time last quarter and 660 crore same time last year. So 100 crore added in terms of profitability right there. And when you're looking at the numbers, they're looking very, very sharp indeed. Last year, the PAT number was at 429 or 430 odd crore. This quarter, the PAT has come in at 899 crore, which is just shy of 900 crore. Even last quarter, that number was at 873 crore. So you can see the spike on the stock price. And very quickly, just taking you through the NII number as well, which is the net interest income. It's come in 20% higher on a YOY basis. It's come in at 2413 crore versus 2013 crore. Capital adequacy remains strong. No fundraise likely in the immediate term, at least basis the number that I'm seeing on my screen, which is at around 18.5%. Gross NPAs have inched upwards, some part of it due to seasonality, as is always the case in Q1. But that's really how it's shaping up. Before I go to Vineet Bolinchkar, who's also joining us, let me take a chart check from Kunal. M&M Finance, Kunal?
Yeah, it's a very interesting chart because the stock had been relatively underperformer with respect to many of its other peers. We look at 2022-23, the stock was almost at 300-320 mark. There was a phase in 2025 where the stock moved up towards 400, but then it fell back towards 300-320 odd range. So it looks like that the stock is ending this period of 2-3 years of a consolidation, and now the risk what starts to look attractive on two fronts. One is because of this time-wise correction, and the second is you look at the entire sector. Most of the stocks are coming out of their consolidative phases and starting to show signs of a big breakout for themselves. So we are in an environment where the entire financial services basket looks very attractive. I think in that sense, M&M Finance could be a good bet from the current levels.
Okay, that's that on M&M Finance. In fact, we're going to take a very quick break on that note. When we come back, Vineet Bolinchkar as well is going to join in on the market discussion.
In association with the all-new YONO, power to every Indian.
Every champion starts somewhere. Your chance is now. Participate in the Pickleball Now Grand Prix and earn a chance to play in the Indian Pickleball League 2026. Your ticket to play in Pro League is here. Register now. Your road to IPBL begins now. Hurry up.
ओ ब्रांच मैनेजर मेरा लोन अप्रूव
कर सही मुथूट फिनकॉर्प है। यहाँ लोन के लिए नाचना नहीं पड़ता है।
लोन अप्रूव
मैंने तो बोला था। मुथूट फिनकॉर्प, बुक योर गोल्ड लोन टुडे।
What happens when the game changes? You keep moving. You keep slaying. Keep celebrating. And if they keep talking, keep them talking. Because no matter how far you've come, you keep walking.
आत्मनिर्भर उत्तर प्रदेश की एमएसएमई ताकत, छोटा उद्यम, बड़ा रोजगार। उत्तर प्रदेश में अब युवा सिर्फ नौकरी खोज ही नहीं रहे, रोजगार देने वाले भी बन रहे हैं। छोटे उद्यमों को बढ़ावा देकर एमएसएमई विस्तार की नई कहानी लिखी जा रही है।
उत्तर प्रदेश के अंदर एक बार फिर से एमएसएमई पुनर्जीवित हो गया है, जिनमें 2 करोड़ से अधिक लोग कार्य कर रहे हैं।
मुख्यमंत्री युवा उद्यमी विकास अभियान से 1,47,000 से ज्यादा युवाओं को उद्यम लगाने में मदद मिली। इन इकाइयों से 4,51,000 से ज्यादा लोगों के लिए रोजगार के अवसर बने। मुख्यमंत्री युवा स्वरोजगार योजना से 37,000 से ज्यादा युवा लाभान्वित हुए और करीब 2,98,000 लोगों को रोजगार मिला।
खाली एक योजना से, सीएम युवा योजना से 1234 उद्यमी यहाँ तैयार हुए, तो ऐसी बात है 5 से 10 साल में एक बहुत बड़ा इसका स्केल अप दिखेगा।
छोटा उद्यम बढ़ेगा तो रोजगार भी बढ़ेगा।
जब एक इंडियन के हाथ में पावर आता है, वो एक कामयाब लीग कैप्टन बन जाता है।
सोचो,
जब हर इंडियन के हाथ में पावर आएगा, इंडिया और कितना कामयाब हो जाएगा।
इसलिए योनो देता है हर इंडियन के हाथ में पावर। द ऑल न्यू योनो, पावर टू एवरी इंडियन।
Back with closing trades right here on 18 hours. Still status quo, really down about almost 100 odd points for the Nifty futures as we speak, though we're still latching on to that 24,150 print in trade. HDFC Bank, Reliance, and now SBI, which has suddenly seen a bit of a shift come by. It's now the top 3 dragger on the index. It's 1.25% lower for SBI as we speak. And then, of course, some of the technology names as well adding their weight. TCS Infosys as well dragging the index lower. On the flip side, many are gainers, but not so much in terms of weightage. I guess that's why the index is skewed in favor of the declines. Even within the breadth of the market, though it started off favoring the advances, but now it's the declines which are taking over. Dixon, Avari, Amber, Paytm, Premier Energies. These are some of the laggards in trade. But Vinit Bulinchkar as well joins in on the show right now. Vinit, hi, afternoon. Great to have you on the show. Vinit, how long before you see pressure coming off from names like HDFC Bank?
I think it's going to take a couple of quarters more because, we still have got the growth going, but, they're still struggling with the NIMs. But I think it'll take a couple of quarters more before they kind of start showing traction in the upward direction.
How are you looking at some of the numbers from the two-wheeler pack? Bajaj Auto as well as TVS, some very strong numbers coming our way. Should you go probably start looking at some of the other two-wheeler names, the heroes of sort?
I think that, TVS Motor is the one to go with. Fantastic numbers, good profit growth also. And, it has been a laggard for, several quarters now. And with this, impending breakout, I think the stock can really do well going ahead. So my bet is with TVS Motor. And our topic also remains Ather Energy. We think that the two-wheeler and especially EV space is going to be exceptionally well.
Okay. Let me ask you the same question, Shivangi. What's the take on charts? I know you gave us your view on TVS, but what about a Hero? What about a Bajaj? Give us your take. Should one go long on any of those from a short-term trade perspective?
Yes, Harsh, if we're talking about the auto space, I think Bajaj Auto has done quite well. But today we've seen that some bit of profit taking can be seen at the higher levels. Overall, it is giving a good bottom out structure. Yes, the auto space in general, I think my take would be to keep it diversified with 2 to 3 picks rather than getting concentrated with one idea. And in this space, of course, Aisha Motor has also done quite well. We are seeing that from the last 4 to 5 trading sessions, it's been making higher top, higher bottom. We had seen that previously on 25th June, it failed to surpass 7750 zones. So we're heading towards that, and we are kind of moving in good momentum towards those levels again.
Right. Okay, Shivangi, stay with us. Lots more to talk about, but here's an ET Now exclusive. The government has shortlisted 230 products across sectors for indigenization after analyzing 335 of total products. In fact, the move is aimed to boost domestic manufacturing and reduce import dependence once again amid global uncertainties. Prakash Priyadarshi, my colleague, is here with more details on what exactly are these 230 products.
Well, amid geopolitical uncertainties, the government has shortlisted 230 products across sectors for indigenization. In fact, these products have been placed in the priority basket after analyzing 335 products. These products have been shortlisted to boost domestic manufacturing and reduce import dependence amid global uncertainties. In fact, strategies have been categorized in three segments: quicker, scalable, and aspirational. The indigenization of prioritized products will be pursued through short-term, medium-term, and long-term plans. In addition to that, the working groups have reviewed products across 25 ministries and departments. You are aware of the fact that the government had constituted 6 working groups to identify products for indigenization amid geopolitical uncertainties. In fact, products from sectors such as medical devices, chemicals, textiles, automotive and EVs, capital goods, renewable energy, power, semiconductors, defense, electronics, space and telecommunications, among others, have been prioritized. Along with that, the working groups also identified key barriers to indigenization. In fact, support is likely to be provided in terms of PLI, demand guarantees, and subsidy based on this strategic plan. So these are key developments at this point in time as far as domestic manufacturing is concerned. The government has identified 230 products amid geopolitical uncertainties that will be given a priority for domestic manufacturing.
Okay, seems like more PLIs coming on the way. Having said that, just mapping what the market is right now throwing up, and once again, you're seeing the gold financiers hold out very well. Vinit, a renewed vigor now for these gold ancillaries, Manappuram, Muthoot, etc., and some of the, jewelry retailers as well are looking very smart indeed in trade. You think a buying opportunity still?
Yeah, definitely. I think they've been, trudging along quite nicely. And with the renewed vigor, I think these stocks should do well. Especially Manappuram is slated to do very well. I expect, with the gold prices also looking to, start rallying sooner than later. I think, the natural growth of, re-rating of the pledged gold will also help them improve their lending with minimal costs. So I think very, very interesting trend, and we expect all these companies to do well.
Looking at some of the other actively traded ones today, look at a Naukri, that stock holding up 1%. It's seeing an OI build-up of really nearly about 21%. Oro Pharma is the other active mover today, almost a 1% uptick, 1570 thereabouts is where that stock is. Marico down 0.8%, OI build-up of about 12%. KEI is very active, and so is Oil India, although the stock is under pressure, 1.6% as we speak right now. Shivangi, come in on some of these pharma charts. Today, of course, Oro is looking very smart, but anything where you think is still a buying opportunity?
Yes, definitely Oro has done quite well, but my focus would be on some of the diagnostic name stocks. Laurus Labs has been my preferred pick since a long time. It's been trading very well and maintaining its upward sloping channel on the higher time frame on the monthly basis. We've seen that there has been significant buying on any retracement level on the daily frame as well, and this one's quite resilient and strong. So we're recommending that this could be one of the portfolio stocks. The next immediate targets I'm looking at is 1650 levels, and then positionally 1700 would be on the cards. Now, stop loss could be trailed upwards at 1550 zones.
Okay, that's that and Loris Labs, and that's what Shivani's identifying right now on the charts. Shivangi, that is. ABSL AMC is the other one which is in focus, and that's plunged after flat revenue growth in the first quarter. In fact, Mitali is here with more details on how the quarter has panned out for them.
Rightly mentioned, so Aditya Birla Sun Life AMC, after reporting its Q1 FY27 results, the streets are not liking the results because the expectations were more on a flatter revenue growth that has been seen on a sequential basis. The stock has been under pressure. Now, the AUM of the company, the company actually has posted a 12% year-on-year increase in their profits, while the profits are up 55% on a sequential basis. But the revenue, if you see, it is just up 1%, and also it is supported by healthy growth in the AUM and also continued investor participations coming in from the mutual funds. However, the market reaction was negative because of that sequential subdued growth in its top line. The key concern was that while the profits have improved, but the top line could not meaningfully translate into the higher fees income for the company. And analysts say that the asset management industry is actually still under dealing with the margin pressures driven by intense competition, changes in product mix, and also regulatory limits on their expense ratios. Now, going forward, the management commentary on the improving yields, expanding asset equity under management, and also sustaining the margins will be a close watch. But as of now, we see that after the Q1 FY27 results, the stock is clearly under focus.
Okay, that's Aditya Birla Sun Life AMC tanking in trade after its numbers. Shivangi wanted to get a final call in on how you're seeing the Nifty Bank composition move henceforth. Even though SBI is under pressure today, but have you seen any shift from private banking names after the weakness that played out post the numbers and the reactions that trickled in through yesterday to now PSU banks by any chance?
Definitely, Aisha. Private banking names have taken a back foot, but some of the heavyweight counters were kind of consolidating. But some of the PSU names have now come in forefront. Of course, SBI has been a little laggard, but we could look at something like Federal Bank, which has been quite strong. This one's moving very resiliently without, I think, having a look at Bank Nifty from the last 3 sessions. We've seen that it had consolidated for a long period of time on the monthly basis, and after this consolidation from the last 2 months, it's been quite remarkable. So definitely this one would be on radar. Federal Bank for the next upside move towards 370 levels and support.
Well, we seem to have snapped that line, but Shivangi, we let you go on that note. Thanks as always for your time. Just marking the market moves today, and it's important to highlight the losers, not just the frontliners, but even within the broader end of the market. Look at a Dixon, for instance. And Kunal, this is the second day of weakness that you're seeing for some of these EMS plays, right? What do you foresee now on the charts for Dixon? Some more follow-through selling?
Not really. I would actually believe that this could be more of expiry related move for these stocks. Maybe some sort of a shift which could start off into these names. The near-term charts for Dixon Tech has been very positive. The stock in just the last, I think, 2 or 3 months has recovered from 10,000 or sub 10,000 levels to 14,000 plus, which the stock had tested in the last, I think, 2-3 days back. So it's almost like a 40% jump for the stock price in the last 2-3 months. Mild bit of a cool off, which could happen because of the expiry-related, volatility. But I would actually believe that this could be a good opportunity for positional traders to try and enter into these names. I would sense that if in case there is a drop down to say 13,700, 13,600 mark, that could be a very good mean reversion point for traders to come back and look at building up more long positions.
Okay. Well, 2 important earnings awaited. That's Eternal as well as Dr. Reddy's too. So let's try and figure out what the street is penciling in, and then we'll take Vinit's comment as well on that. But first, let me start off with Eternal because we are anticipating a very strong quarter from Eternal as the margins are expected to improve on a sequential basis. In fact, the management has already guided for 3,000 dark stores by March 2027. Snehi, in fact, is here to tell us what the ET Now poll is penciling in for Eternal.
Well, yeah, speaking of Eternal, we're expecting to see a very good quarter from Eternal this time around. Now, if I have to break down what the expectation is, on a consolidated sequential basis, we're expecting the revenue to grow by about 16%, exactly at 20,000 crores. Around that number, we're expecting the top line to be. The EBITDA is expected at 664 crore rupees, which is a very healthy uptick of 36% on a sequential basis. Net profit, we're expecting to see at 300 crores, which is again up more than 70% sequentially. And margins also, we're expecting to see some good expansion over here of roughly 50 bips. Remember, this time last year, this time previous quarter rather, the number was at 2.8%, and we're expecting a sequential jump to 3.3%. Now, in terms of some segment expectations, food delivery is expected to do well. The revenue is expected to go up by 10% sequentially. NOV is expected to grow in tandem as well. The contribution margin is seen at roughly 10% of NOV, and EBITDA margins are seen at 5.2% as a percentage of NOV. For quick commerce, for Blinkit, once again, we're expecting to see very good growth. Revenue is seen growing up by 40.5% on a sequential basis. The GOV, we're expecting to see this expand by 26%. NOV growth seen of 20% on a sequential basis, and contribution margin is likely to come in at 5.5%. EBITDA margin is likely to be at 0.6%. This is important to know because we're expecting the EBITDA margin to be positive this time around as well for Blinkit, and that's an important metric to be tracking. Store count now for Blinkit's dark stores is expected to reach 2,468, which implies that roughly 225 stores were opened in the first quarter. Now, the management has guided for 3,000 dark stores by March 2027, which means in this financial year, they need to be opening around 800 stores, which means any number above 200 stores per quarter is good, and we're expecting them to open 225, so on track to meet their target as well. For the going out business, that's District, revenue is expected to fall by 10%. For Hyperpure, revenue is expected to grow by 25%. So lastly, when the numbers do come out, watch out for commentary on outlook of competitive intensity, Blinkit and food deliveries GOV and NOV growth, their margin outlook, their average order per value for Blinkit, and their management commentary on new versus mature stores, how they are performing, and the expansion of dark stores, if they're hiking this number at all. So watch out for all of these factors, but yes, all in all, we're expecting to see a good set of numbers from Eternal.
Okay, thank you so much for that, Snehi. In fact, Dr. Reddy is expected to report subdued first quarter. Consensus estimates pointing to lower revenue, margins and profit due to high base from generic Revlimid and pricing pressure in North America. Meryl here with what to expect.
Right, so muted set of first quarter numbers is what seems to be on the cards for Dr. Reddy's. Kicking off major pharma earnings, Dr. Reddy's is set to report its first quarter results tomorrow. Let's take a look at what analysts have penciled in terms of expectations for the company. Well, on a year-on-year basis, the performance is looking quite bad. Revenue is expected down almost 4%. EBITDA seen falling 40% on a year-on-year basis. Margin contraction is seen at margins coming in at 17% compared to 27% in the last year. And profit after tax is seen declining almost 50% on a year-on-year basis. The biggest drag coming in from North America, where the G Revlimid base effect as well as continued erosion in the company's base generics business is likely to weigh down on the entire business. In addition, the Canada semaglutide ramp up, which is expected to cushion this impact, is now going to be suffering as well, as semaglutide supplies have been disrupted for Dr. Reddy's as a whole. On the positive side, the India business is seeing in a bright spot with double-digit growth expected in the range of 13 to 16%. This is, of course, to be supported by strong IPM growth, a healthy chronic portfolio, as well as innovation-led products that Dr. Reddy's has in its portfolio. Europe as a geography is also expected to perform well. It's expected to post double-digit growth aided by strength in the nicotine replacement therapy or NRT business for Dr. Reddy's. And on the margin front, analysts are expecting pressure coming in from firstly generic price erosion, higher input and freight costs, and also the absence of high margin G Revlimid in this quarter as opposed to last year's higher base. So now key monitorables for the result coming in tomorrow will be first of all the G Revlimid base effect roll off. We're also going to be watching out for any guidance in resolving semaglutide supply issues. Do remember that the management had given us a timeline of October to November of this year where supplies could come back on track. So we're going to be watching out for any progress on that front, since this timeline given was also expected to be quite an aggressive one. We're also going to be watching out for any new commentary on G Abatacept as well as new product launches from Dr. Reddy's side, as well as the impact, especially the quantified impact of higher freight and input costs on the company's total profitability. So this is all that you should be aware of leading up to Dr. Reddy's first quarter update.
Okay, that's the expectation coming in from Dr. Reddy's and, of course, Eternal as well. Vinith, wanted to understand what is it that you're penciling in for Eternal? Of course, you know, the guidance already has been set out in terms of the dark store additions that they foresee. But other than that, do you think the positives so far are already baked into the stock price, or do you see further headroom should the numbers even be in line?
So it is one of the best plays in the quick commerce segment. But, we think it's already priced in, and until we get some, exceptional growth and some exceptional margin management, I think the best part of the margins have already been discounted. So not very gung-ho on that, but it's not even a sell either.
Okay. The other one is, of course, SBI AMC. I mean, SBI Funds, which has debuted today. Strong debut. Vinith, would you go out and buy even despite the kind of spike in the stock price?
Yeah. I think, it has still got legs for another $100 of move. So if you're holding for a couple of years period, I think this stock can do very well.
In fact, let's take it across to Mitali then and find out what the listing day debut has been like for SBI Funds.
SBI Fund Management, India's largest asset management manager. It has actually had a positive debut on the Dalal Street with a stock listing of nearly 7% premium today. And however, it is below the grey market expectations, if you see, which had pointed out to around 16% premium. The IPO itself actually is one of the biggest public issues of the year, raising around 9,813 crore rupees through a complete offer for sale with no fresh shares issued. Now, the existing shareholders, SBI and Amundi, they have no further dilution planned as of now. And also the issue has, if you see, it has received an overwhelming response. Nearly over 41 times it got subscribed, led by the robust institutional demand. So going forward also, those institutional names have a strong backing for the stock. And speaking to ET now at the listing, the SBI chairman CS Shetty, it made it clear that the listing is actually a capital markets event and not a strategic shift. He reiterated that the partnership with Amundi, it remains unchanged even after listing, and there are no plans for further stake dilution. And both partners, they will continue to drive the growth going ahead, leverage the global best practices for the company, and also enhance the investor value. And yes, the stock has been in focus.
Right, okay, that's that at SBI Funds. And the debut, although the stock has come off from where it started off in trade, it's pretty much around the day's lows. And if you were to draw any sort of comparison between how SBI Funds Management and how SBI Cards actually kickstarted in trade, much frenzy around these IPOs. Having said that, it's been muted in that sense, given the kind of subscription figures that you had for both of these issuances from the SBI stable. Come 23rd of July, and you will also have Infosys come out with its numbers. Vinith, curious to know how you're mapping the entire IT pack now ahead of Infi's numbers day after.
We continue to be bearish on this sector. I think, more pain is still around the corner. We will see a lot of margin compression going out in the quarters ahead. So, not really gung-ho on this segment. I think AI-based, margin erosion is going to happen going ahead. So we continue to be very skeptical on this space.
Kunal, your top picks, if at all any, from the IT pack, what would you really bet on if you had to?
So I think HCL Tech and Techem are the ones which are very strong on the larger cap names. They have shown a very good relative strength edge in the last, I think, 2-3 weeks of this price recovery for the IT index and the IT stocks. From the mid-cap end, Persistent is still one of the better ones in the recent price recovery. Of course, the best performing stock in the mid-cap IT names is the likes of Oracle Finance. That has done exceptionally well. Tata Tech also, in terms of the IT enabled services, I think that stock has also done reasonably well from a low of 550. somewhere mid of, end of 2025 towards 750, 740 mark, where the stock is trading right now. So there are a lot of those individual stocks which have done really well. And when you're looking at a sector going through a recovery, it's very difficult to pinpoint just one or two stocks. Only, the only mix which you can probably keep is a good balance between large caps and mid caps.
Okay. The other one which is absolutely flying in trade is Karur Vysya Bank. I wonder if you've looked at the numbers, Vineet, at all.
These numbers, and it's one of the better banks where the valuations will hold out. I think it's one of those mid-cap names which warrant being invested for the long term. Very high conviction on this one.
How much do you believe is there in terms of upside, Vineet, on this one?
Yeah, I think, you look at it as a portfolio stock and, you can get your 20-25% compounding over the next few years.
Very interesting.
Right. Just looking at Ather Energy, given that QIP closure now and the fact that they're raising another 1,300 odd crore rupees within a very little gap from its listing, come to think of it. And if you were to just stack up how Ather and Hero actually have moved, Vinit, wanted to get your sense. Given the stark underperformance of Hero vis-a-vis how Ather is panned out, would you say within the two-wheeler EV plays now, perhaps Hero has a chance to play catch-up?
I think Ather will outbeat each and every one of the two-wheeler stocks that is there. And, where we get a confidence from the fact is that, among the trio of Hero, Bajaj and TVS, we are going to see a lot of cannibalization play out going ahead. So while the sector will grow, what is going to happen is that EVs will replace some of the demand coming from your ICE vehicles. And in contrast to that, Ather Energy will continue to grow purely based because, it is looking at completely a pure EV play. And we think that they will sustain market share also. So we'll see some very heavy growth come out there from this segment.
India Mart is the other one. Numbers just out as we speak. Waiting for those to fully flash on our screen. 414 crore versus 372 on a YY basis is where the revenue sits at. You're seeing PAT at 172 crore versus 154. Some bit of operational efficiency playing out. And you're seeing the EBITDA number at roughly 146 crore versus 133, a 10% increase on the EBITDA count as well. Margins coming in at 35.1%. India Mart, therefore, in focus. No move on the stock, at least as we speak. In fact, if at all, a wee bit of a correction that we're seeing. Well, late minutes in terms of the market today, the last few minutes of trade. Vineet, leave us with a couple of your top ideas.
I've already spoken about Ather Energy to you. Cannot emphasize more on that.
Okay.
We like RBL Bank. I think RBL Bank is going to go ahead places. One stock which could turn around the corner quite smartly is IndusInd Bank because they're also on a very disciplined path of resurrecting themselves. So I think that can be a dark horse as far as the banking stocks are concerned.
On M&M Financial, I'll come to Kunal on that. But Vineet, I know you were also one of the early bulls on Paytm. You're now sitting at what, 1,300 rupees in terms of stock price? What next?
So I think we've got a target of around 2,000 on the stock, and we think that will play out over the next couple of years. Nothing has changed. The story is immaculate, and it's only going from strength to strength. And now we are seeing actually the profit numbers actually being delivered. So we've already seen the stock done about 30% in the last few months. And I see no reason why the bull market should continue.
Right. Okay, Vineet, we'll let you go on that note. Thanks as always for your time. That's that on the entire banking as well as market construct. But Kunal, what about the charts on IndusInd Bank, the flare-up in the stock today, and the other one that Vineet was talking about, RBL Bank? How are those charts looking?
So IndusInd is a very, very interesting chart. In fact, the stock has been one of the better performing names in the private sector banking stocks, the larger cap ones. Of course, the stock has recently crossed levels of 1,000. It's come back to that zone, I think in 2025 start, when that news flow had happened for IndusInd Bank. The stock had actually fallen from those 1100 marks towards 600, 650 levels for the stock price. So that 40% correction is now what the stock has slowly and gradually recuperated. This looks very interesting. I would actually believe that once the stock confirms the breakout of that 1100 levels, say on weekly closing basis, we could be looking at a big turnaround of sorts for IndusInd Bank. So this stock should be on, I would say, a medium term or a long term kind of a trader's radar. RBL Bank is a little bit of a high beta stock. The stock has been hovering around this 370 plus minus 20 points for itself over the last few weeks. But the only concern over here is that that sudden bit of volatility which comes back into the stock price, a 20 point or 30 point drop. So it's always better to buy the stock when that phase of volatility comes back. I sense close to 350 could be a good support point for RBL Bank.